This technique
should be illegal.
it is so good. It works so well. Hey guys, welcome to another video. So today's video is gonna be smart money. So a while ago I asked you guys what sort of video you want to see next, and the majority of the people vote smart money. So this video is gonna be a smart money trading or ICT. They're all the same thing. It's just a fancy term being thrown around each way. I will tell you guys one thing. This technique should be illegal. It is so good. It works so well, and I'm gonna explain it. What's the good thing about it and what's the bad thing. So watch the video. So before we jump into the main video, this was a setup I sent in the VIP group, a signal. It was a buy on EuroCAD. We did an entry after some liquidity grab was done, and we caught a beautiful 3R to the T, and then after that I just dropped. So we got 3R, and then I sent another signal on gold, which was around here. We got stopped out by about 10 pips, and then this thing went and hit my target. So I was a bit disappointed with this one because it already took the liquidity from these lows, but then it came back for another one. So yeah, it's one of them things. So I sent two signals this week myself, so still up 2R for the week. Yeah, that's that. If you want to join, link in the description as always. Okay, so this thing that I'm going to show you, it is so effective that it's unbelievable. And what it is basically making an entry after we have some sort of liquidity, and the liquidity that we're going to be after is very specific. It is the Asian lows and the Asian highs. Let me explain what they are. So let's assume this is the Asian high, and this here is the Asian low. So what does this exactly mean? Let me annotate this. Asian low and Asian high. It is very important you pay attention to this video and watch it all the way. Otherwise, if you get it wrong, you know what's going to happen. Stop loss, stop loss. So this essentially, what does it mean? It means from, let me just see what time. The Asian low and the Asian high is the price range from 1 AM to 7 AM. This is UK time, by the way. Okay, and it is basically the price movement during this time. Okay, and the idea is that when price is approaching the Asian low, let's say in London session or New York session, we want price to go underneath this Asian low, like maybe a candle close underneath it, and then we want immediately the next candle to close back inside the structure. That is one way. Another way is we don't need the candle close. We just need maybe the candle still in the area, but it wicks. So it wicks and then closes back in the structure. Same thing on the Asian high. So close above structure, then it closes back below structure. Or we can go for the alternative route, which is it can wick and then close back within the range. The timing is key, and how it closes above and below the structure within this range is also very important. Now let me show you an example. Keep in mind these two examples, okay, of how the candle need to close. So here's a price action on gold on the 1 hour. So here is the Asian high, so I just call it AH, and here is the Asian low. Okay, oops, let me make this capital so it's easier and consistent. So from here to here, this was the range within the Asian session, which is from 1 AM to 7 AM UK time. Now what we're looking is for price either to break above it and then close back in, or below it. You mark it on the 1 hour and then you go to the 15-minute time frame to get that candle confirmation. So here's the 15-minute time frame. We played price. Okay, so you can see price closed above the Asian high, and immediately it closed back within the range. This is a good liquidity grab. Then what you do, you go to the 5-minute time frame, and we can see that this move up happened from around here. So here we need a break of structure on this 5 minute. Okay, you play it. Okay, here we have it. We have a clean break of structure which closed underneath this area. So now here we are looking for a gap, an imbalance basically, okay? Where is the imbalance? Well, we have an imbalance sitting over here. We took the Asian high liquidity, we broke structure. So what you do, you put a sell limit over here like that. You can put your stop loss just above the high or just above this gap, okay? It's up to you. Now, where do you want to target? Targeting, you have two options. One, you can target the Asian low, assuming it hasn't been taken, or you can target this low here. Both valid. Let's say we're gonna target the Asian low. Now you play a price and see what happens. It missed us because it came, instead of going to the gap, it came and reacted to this order block, which is fine. We are not going after an order block. We are annotating gaps, imbalances, fair value gap. There's so many terms for the same thing, and it didn't come to that area, okay? So what happens here? All of this, you've missed it. So now you delete your sell limit, okay? No problem. Now we are coming back to the Asian low. Now we're gonna be looking for some sort of liquidity grab on the Asian low. So go on the 15-minute time frame and just wait for price to come to the area. Okay, it came into the Asian low area, it took liquidity and closed back above structure. And you can see how it just moved very bullish, so it just engulfed the previous candle. Now go to the 5-minute time frame and mark your area where you want a break of structure to happen. I personally want to have a break of structure here. I think here would be valid as well. Here, not too much, but it still would be valid. This is more of a substructure. Main structure for me is here. If price doesn't break the structure, I am not interested. As simple as that. Okay, we close above the structure, which means this is a break of structure. Now, you need to mark the fair value gap, the imbalance, the gap, all of these terms, it mean the same thing. So let's mark it. You can mark it on the 15-minute or the 5-minute. It's entirely up to you. So this is the gap that I'm gonna mark, and I'm gonna add a buy limit, just like that. Stop loss, you can put it either here or down here. I think I'm just gonna put it just a bit underneath this gap. Now, when it comes to targeting, yeah, you can either target the Asian high, okay, or you can target this area, which is the recent high. Entirely up to you. One other thing you need to keep in mind is, as you see prices coming down, we don't want this area to be taken. If price goes up to take this, then this is the recent high being taken, therefore this buy limit would be invalidated. So now we just play it. Let me move this on here. And let's say I'm not gonna wait for the Asian high, I'm just gonna wait for this area, yeah? I just wanna get the recent high, okay? Okay, price triggered you in, stop loss didn't hit. Probably hit the take profit arrow here, but still we play it, let's see. All of this, no problem, you have to be patient. There we go. And it hit the Asian high if he held all the way. And this is how this works. It is a very simple liquidity based trading technique using smart money concepts, okay? This is something I've learned recently. I'm going to be practicing it a lot, but it works. I've been doing it live testing on the market and it works really well. So that's the beauty. The win rate is extremely high. What is the bad thing about this technique? The disadvantage? It doesn't happen often. You're gonna get Asian highs, Asian lows every single day, but the way the candles close, it invalidates it. Let's assume this was our Asian low. Price came, it closed underneath it. Totally fine. But this next candle didn't close back above structure. Therefore, if this was your Asian low, this setup would have been invalidated. So you could have waited for this for like 7, 8, 9, 10 hours just because of the way this candle closed on the 15-minute, it invalidated your whole setup. So that's the only bad side. You need to be very patient. But when the setup provides itself, whew, it is beautiful. Like, like look at this. This was a massive win. You can get 7, 8, 9, 10 up very easily. Your entire week would be done. So this requires a lot of patience, but remember, the most profitable traders in the world are the patient ones. Money gets transferred from impatient traders to patient traders. So yeah, practice this. It works really well. Any questions you got, the comment section is the way to go. I'll see you guys next time. Peace!